You've probably seen posts like this one floating around social media. Mileage logs aren't optional. The IRS will shut down a deduction if you can't prove it. I know it sounds dramatic, right? But here's the thing, it's 100% true. And the tax court has hammered taxpayers over and over again for failing to keep proper mileage records. What's up, guys? Corey Hankerson here from Legacy Tax, but most folks know me as the Levy King, because if the IRS took your check, the Levy King will get it back. 1-877-LEVY-KING, LevyKing.com. Today we're talking about one of the most common and devastating mistakes a small business owner can make. And that's claiming mileage without adequate records. And I'm not just going to give you theory, I'm going to show you exactly how the Internal Revenue Code, which is the IRS's own manual, and real tax court cases treat this issue. First up is the law. Mileage deductions are governed by the Internal Revenue Code Section 274D. That section lays down what is called strict substantiation. Translation, you don't get to estimate, you don't get the ballpark. You have to be able to prove, number one, the amount of each expense. Number two, the time and place. Number three, the business purpose. And number four, the business relationship, if applicable. If you don't have that information, you're done. Unlike other deductions, the tax court can't use the famous Cohan rule to approximate your mileage. So, no log, no deduction, period. Even the IRS's own handbook, called the Internal Revenue Manual, tells its employees exactly how to handle audits and investigations of mileage. The Internal Revenue Manual 4.10.5.2.8.1 says examiners must verify mileage with contemporaneous records like logs, trip sheets, or electronic records. They even specify that reconstructed record prepared years later just for an audit don't count. So when I tell clients to snap pictures of their odometer at the start and the end of the year, I'm not being paranoid. I'm making sure they have evidence that holds up against both the IRS and the tax court. Now, let's look at what happens when taxpayers ignore this. First up, we got Craddock versus Commissioner. In this case, the taxpayer kept the mileage log. Sounds good, right? Problem, it wasn't credible. The court said it looked like it was created after the fact, not contemporaneous. Result, mileage disallowed. Next up, you got Wolpert versus Commissioner. Here, the taxpayer claimed car and truck expenses, but had no contemporaneous mileage log. The court flat out said, you didn't substantiate, you lose. Deduction denied. Want another one? How about Easy versus Commissioner? This was even harsher. The taxpayer lost almost every Schedule C expense, including vehicle deductions, because there were no records. The court cited Section 274D and said, quote, without adequate substantiation, deductions must be denied. So you got three cases, three taxpayers, three losers, all because of one thing, lousy record keeping. Okay, so here's what you should do if you drive for business. You want to keep a contemporaneous mileage log. That means write it down or record it in real time. You want to use apps like MyIQ or QuickBooks Mileage Tracker if you hate pen and paper. You want to snap photos of your odometer every January 1st and December 31st. That gives you year-end totals, and you want to record the purpose of each trip. Was it a client meeting? Was it a supply run? Or was it a business conference? Because when the IRS comes knocking, or worse, when you're in tax court, I don't know, I just drove a lot for business, doesn't mean a damn thing. Because when the IRS comes knocking, or you find yourself in tax court, just saying something like, I don't know, I drove a lot for business, that ain't gonna cut it. All right, guys, so that's it. That's the truth about mileage deductions. No log, no deduction. That's not just IRS policy, though. That's also tax court reality. The IRS will shut you down if you don't have proof. But I've helped thousands of clients push back against the IRS and win. If you're already in hot water with the IRS, levies, liens, garnishments, don't wait until record-keeping mistakes cost you thousands and you get buried under a mountain of tax debt. Speaking of tax debt, I want you to know that there are special programs in place to help you get a fresh start. But how do you know if you qualify? You see, no two cases are exactly alike. So how do you know exactly how much you can settle for? Well, I've created a free tool to help you get qualified for a fresh start. Just head over to www.levyking.com or click the link below, follow the prompts, answer a few simple questions, and we'll help you figure out your eligibility. That website again is www.levyking.com, or you can give us a call at 1-877-LEVY-KING. That's it for this week, guys. Talk to you later. Bye.
1-877-LEVY-KING, Levy Levy King. 1-877-LEVY-KING, levyking.com.
Owe back taxes to the IRS? Call the Levy King. He's the best. 877-LEVY-KING, levyking.com.
1-877-LEVY-KING, levyking.com.